Hey y'all, you know what? Instead of doing a video and whatnot, I literally just want to focus on the numbers here. So I've been bringing it up in the past when Trump decides to, or was thinking about bringing up the 50-year mortgage. And then the director of FHFA said, yeah, we're actually working on it. And I'm like, huh, do people realize what a 50-year mortgage actually do? So here is an example on a spreadsheet, right? There's that saying, numbers don't lie, people do. Now, if the median home price of a house, let's just say it's 450, it's technically 435 500 as of September 2025, but let's just say 450 just to make numbers easier. And let's just say we're putting 20% down. That would mean that's 90 grand. So your loan amount would be 360,000. On a 30-year fixed mortgage, let's just say the interest rate is 6.5. And it's, like I said, 30 years. The monthly payment, principal and interest, I'm not talking about property taxes, I'm not talking about insurance, I'm just talking about the principal and interest, would be $2,275.44. Now, before I go down, let's go back to a 50-year mortgage. I'd use the same numbers, but remember, the longer the term, the higher the rate. Typically, is a 0.5%. So if you were to do a 15-year mortgage versus a 30-year, it would typically be a 0.5% cheaper. But since you're doing a 50-year mortgage from a 30-year mortgage, let's just hypothetically say the interest rate is at 7% flat. Okay. You see the payment right here on the bottom. It says $2,166.08. Now, that is a savings of $109.36. But if you look at how much interest you're paying, so on a 30-year fixed mortgage, if you were to pay the house in 30 years, you would be paying a total of $459,160.16 of interest on top of the $360,000 principal that you have to pay off. So you add those two together. A 50-year mortgage, you're almost, actually you are doubling, more than double the amount of interest you're paying, obviously because it's extended for 50 years. But if you really want to look, if you take $109,000, $109.36, and then you multiply that by 12 months, that is a savings of $1,312.32. But if you take that number and then you're going to multiply that by, let's say, 50 years, you'll be saving $65,000.16. But how does that make sense when you're paying $480,000 in interest additionally on top of what was paid on a 30-year fix at 459? So that number doesn't add up, and that is what I'm trying to reiterate, that you're only saving $65,000 but on a monthly payment, but you're paying $480,000 more in interest for the life of the loan. So that's all I'm gonna say. That's all I had to say. And if you have any questions, feel free to reach out. I mean, it might help some people out, especially in California, but it's not generally the best for a home buyer. They're trying to make this a affordability type of loan, and affordability for the monthly is great, but nobody's dumb enough to pay this much interest ahead.